Hi, good morning students. Myself Kulandaraj, accountancy lecturer, SDC College, Bangarpet. In the last class, we have did till the 19th problem. Now, we are moving on to the 20th problem in the method issue of shares at premium, reissue and forfeiture. In the today's problem, we can see the 20th problem, that is May 2015 question paper problem. Mandia Sugar Company Limited issued 20,000 equity shares of rupees 10 each at a premium of rupees 2 per share. The amount was payable as follows. Now you can notice that face value of the share is 10. They are giving the premium value of rupees 2 per share. Then the overall issue price, it becomes 12. That means here what happens, the issue price will be more than the face value, then the problem will be treated as what? Issue of shares at premium. See here they are given rupees 2 on application, rupee 5 on allotment including premium. Rupee 5 on allotment which includes premium means what happens? So 3 rupees is the original allotment amount, 2 rupees includes what here? Premium. Already we know that premium of 2 per share. So 3 rupees is the original allotment. In this allotment stage we are collecting the amount of premium also. On the first call again 2 rupees is given. On final call they are given rupees 3 rupees. All the shares were subscribed and the money duly received except on final call on 1000 equity shares. On 1000 equity shares we didn't receive the amount on which thing? On the final call. On the final call we did not receive the amount on 1000 equity shares. So overall 20,000 equity shares are there. Under the 20,000 equity shares we didn't receive the amount on 1000 equity shares, means we have received the amount of only on 19,000 shares, only the final call amount. The directors forfeited the shares and reissued half of the forfeited shares as fully paid at rupees 8 per share. Before problems what we used to do that 1000 shares has been forfeited means the same 1000 shares will be reissued. But here in this problem they are given reissued half of the forfeited shares. When reissued half of the forfeited shares means here 1000 shares are forfeited. In that 1000 half means it becomes 500 shares. So forfeited transaction, forfeited journal entry we used to make for 1000 shares, but reissuing will be made only for how much shares? It is of 500 shares. The value on reissue is 8 rupees. Pass the necessary journal entries for issue, forfeited and reissue. So now we need to see what are the given informations are there in the solution. So when we see premium per share is given as rupees 2. For the issue of shares at premium, we can see here on application 20,000 applications are issued at rupees 2. On the application we are receiving the amount on 2 means it becomes how much? 40,000. On the next stage, that is on the allotment we are receiving, that is 20,000 shares we are giving at rupees 5, which includes the premium. So including premium it becomes 1 lakh. When we separate the premium 20,000 into 2 it becomes 40,000. Remaining 3 rupees, that is 20,000 into 3, 60,000 will be the original allotment amount. Now allotment 20,000 into 5 which includes 1 lakh, that is includes 1 lakh means this amount will be including the amount of premium. On first call 20,000 into 2 that becomes 40,000. On final call 20,000 into 3 60,000. Issue price it becomes how much? 2 plus 5 2 again plus 3 it becomes overall 12 rupees is the issue price, but the face value is 10. Given for forfeiture, share capital forfeited, how many shares we are forfeiting? 1000 shares we are forfeiting into 10 means it becomes 10,000. Unpaid amount, that is 1000 shares they didn't pay the amount. On which shares they didn't, on which type they didn't pay the amount means on rupees 3 rupees didn't paid on final call amount, so it becomes 3,000 credited to share final call account. Reissue price While reissuing, we should be careful because we are reissuing only on how many shares we are reissuing? 500 shares, that is 1000 shares are forfeited. Under the 1000 shares forfeited, we are reissuing half of the forfeited shares, that is 1000 into half, it becomes 500 shares we are reissuing at the price of 8, it becomes 4000. That means we are receiving the amount of 4000 through reissue and it should be debited to the bank account. Now we can move for the journal entries on this problem. So journal entries in the books of Mandia Sugar Company Limited. See here, the first transaction, the first two transaction is related with the application. When we are receiving the application amount, what happens there? Bank account debit to equity share, application account being application money received. We are receiving the amount, so we are debiting to the bank. Bank account debit to equity share, application account. So 20,000 into 2, 20,000 shares we are giving at rupees 2, it becomes how much? 40,000. So again, that received application amount will be transferred to the equity share capital account. So automatically what happens there? Equity share application account debit to equity share capital account. The overall full amount 40,000 we are transferring here. So on application, when we see means we have two transactions. So bank account debit to equity share application account for the receiving of the amount. Next transferring of the amount, what happens? Equity share application account debit to equity share capital account, the 40,000 and 40,000. Coming to the next transaction, that is on allotment. On allotment, remember here one adjustment is given, that is the premium. Always the premium should be credited. So here what happens? Equity share allotment account debit 20,000 into 5. This is an allotment due transactions. Again in the allotment we have two transactions. One is due transaction, the next is the receiving of the allotment money transaction. Here due transaction, what happens? Equity share allotment account debit 20,000 into 5. How much it becomes? 1 lakh. Again under this 1 lakh we have two amounts, original allotment amount as well as the premium amount. To share premium amount, how much it becomes? 40,000, that is 20,000 into 2, it becomes 40,000. Again to equity share capital account 20,000 into 3, it becomes how much here? 60,000. Being allotment money due, including what here? Premium, which includes the premium. Again the next transaction, what happens on the allotment? We are receiving the amount on allotment. When we are receiving the amount on allotment, automatically bank account debit to equity share allotment account, being allotment money received with what here? Premium. So it becomes how much? 1 lakh and 1 lakh. Again moving to here, they have separated the calls. First call is separate, final call is separate. So we need to pass to extra journal entries here. That is here, see here, equity share first call account debit to equity share capital account. So how much is for the first call? 20,000 into 2, it becomes how much? 40,000 and 40,000. This is the due transaction. When we are receiving, what will be happen the transaction? Bank account debit to equity share first call account. How much we have received? 20,000 into 2. Entire amount on first call we are receiving. So 40,000 and 40,000. Coming to the next transaction, that is on the final call. Again on final call we have two transactions, that is one is due transaction, the other transaction is the receive transaction. When we are receiving on the final call, that is when we are making the due transaction on the final call, means what happens? Equity share final call account debit to equity share capital account, that is amount is on call, it is of 3 rupees. So 20,000 into 3, it becomes how much? 60,000 and 60,000. Whether we are receiving that entire amount on the final call, so we are not receiving the entire amount on the final call. Some 1,000 shares they didn't pay the amount on which call? Final call. So automatically what happens here? Bank account debit to equity share final call account 20,000 minus 1,000, it becomes how much? 19,000. 19,000 into 3, it becomes how much here? 57,000. Listen here carefully. On receiving final call amount, we are not receiving on entire 20,000 shares. Some 1,000 shares they are not paying the amount on final call. So 20,000 minus 1,000, it becomes 19,000 into 3. It becomes 57,000 and 57,000. When they are not paying the amount on final call, we are forfeiting that shares. How many? That is, the directors of the company are forfeiting the shares. How many shares they can forfeit? They can forfeit only the 1,000 shares because they not paid the amount on the final call. So what happens? Equity share capital account debit 1,000 into 10. 1,000 into only which amount we can consider here? Excluding the premium, only the face value can be considered here. Equity share capital account 1,000 into 10 means it becomes 10,000. To share forfeiture account, till now how much amount they have paid? They have paid on application, they have paid on allotment, they have paid on first call. So to share forfeiture account 1,000 into 7 rupees they have paid, it becomes how much? 7,000. Again, to equity share final call account, this is the amount they unpaid. Unpaid means what happens here? They didn't pay the amount on final call. So 1,000 into 3, it becomes 3,000. Equity share capital account 1,000 shares, they didn't pay the amount. 1,000 into face value is 10, it becomes 10,000. To share forfeiture account, how much they have paid? 1,000 into 7 they have paid for the application, allotment as well as first call, it becomes 7,000. On which call they didn't pay? On the final call they didn't pay. 1,000 into 3, it becomes 3,000. Again we are making the reissue. So while reissuing, I said clearly in the point, while reissuing, we are not reissuing the entire 1,000 shares. We are reissuing only half of that shares. So half of that shares means 1,000 into half. How much it becomes? It becomes 500 shares. So bank account debit 500 into 8. It becomes how much? 4,000. Share forfeiture account debit. Again, we are making the discount. How much is the discount? Overall value is 10, but we are giving only for 8 rupees. So bank account debit 500 into 8, it becomes 4,000. Then share forfeiture 500 into 2, it becomes how much here? 1,000. Again, to equity share capital account overall amount 5,000. That is 500 into 10, it becomes 5,000. So the difference amount will be transferred. The share forfeiture surplus amount will be transferred to which thing? To the capital reserve account. What is account? Capital reserve account. How much is the difference? You can see here the credit balance of the share forfeiture, we have 7,000. 7,000 minus the share forfeiture debit amount of 1,000, we will be getting 6,000. So 6,000 will be transferred to which account here? Capital reserve account. So being the surplus amount transferred, that is forfeited shares surplus amount will be transferred to which account here? Capital reserve account. Moving on to the next problem, that is the 21st problem, May 2018 question paper problem. Vijay Lakshmi Sugar Company Limited issued 10,000 equity shares at rupees 10 each at a premium of rupees 2 per share. How much is the original value? That is, the face value of the share is rupees 10, but at a premium they are giving of rupees 2 per share. Then it becomes how much? 12 rupees. This 12 rupees will be treated as an issue price. Face value is 10, issue price is 12. That means issue of shares at premium. The amount was payable as follows: rupees 2 on application, rupees 5 on allotment including premium, rupee 2 on first call, rupee 3 on final call. Here see here once again, rupee 5 on allotment including what they given? Premium. Premium amount is how much? 2 rupees. Then original amount on allotment installment will be only 3 rupees. All the shares were subscribed and the money duly received except on final call on 500 equity shares. On 500 equity shares we didn't receive the amount on 500 equity shares of rupees 3 rupees on final call. So the directors forfeited the shares and reissued them as fully paid at rupees 7 rupees. So again they are reissuing at how much price here? 7 rupees. So pass the necessary journal entries for issue, forfeited and reissue. Now we can see the solution. What are the given information is given? First we can see that premium per share is given. How much is the premium is given here? Rupees 2 rupees is given. So on application, how much we are receiving? That is 10,000 into 2, it becomes how much? 20,000. On allotment, 10,000 into 5, it becomes how much here? 50,000, which includes what here? Premium. So what happens? Separated that premium amount, 10,000 into 2 means it becomes 20,000. Then original installment amount will be how much? 10,000 into 3. If premium is not given, it becomes 30,000. On first call, 10,000 into 2, it becomes how much? 20,000. On final call, 10,000 into 3 means it becomes how much? 30,000. Issue price per share will be how much here? 12. So face value is 10, issue price is 12. That means how it becomes? To 5 plus 2 plus again 2 plus 3, it becomes 12. For forfeiture, share capital forfeited. How many shares they are forfeiting? Means 500 shares. That overall value is 10. Face value is 10. It becomes 5,000. Unpaid amount. Which amount is unpaid? The final call, they didn't pay the amount. So 500 into 3, it becomes 1,500 credited to share final call account. Reissue price. 500 shares are reissuing at the average. That is the overall rate is how much? 7. It becomes 3,500 debited to which account here? Bank account. Now coming to the journal entries. Journal entries in the books of Vijay Lakshmi Sugar Company Limited. See here, first transactions, the journal entry will be on the receiving of the application amount. Receiving of application amount means what happens? Bank account debit to equity share application account, being the application money received 20,000 and 20,000. Now it becomes 10,000 into 2. That application amount transferring to the share capital account, equity share application account debit to equity share capital account. 10,000 into 2, it becomes 20,000. We have transferred the application amount. Next installment is allotment. On the allotment, they are given the premium. Equity share allotment account debit, overall shares 10,000 into overall allotment amount is 5. That is including premium, it becomes 50,000. Now we need to separate the premium amount as well as the equity share allotment amount. So if you see here, premium is 2. Just a minute here. Here you can notice that the premium on the share is, that is equity share allotment account debit 10,000 into 5, overall amount it becomes 50,000. To share premium, when we are separating the premium, how much is the premium we are giving? That is 2 rupees of the premium. 10,000 into 2, it becomes 20,000. To equity share capital account, this is the original allotment, 10,000 into 3, it becomes 30,000. On equity share allotment, we have the premium. So premium we are separating, that becomes 20,000. 10,000 into 2, 20,000. Allotment, it becomes 10,000 into 3, 30,000. Now we need to receive that allotment amount. While receiving that allotment amount, what happens here? Bank account debit to equity share allotment account, including premium we need to receive. That means what happens? 10,000 into 5 becomes 50,000 and 50,000. So next transactions is for the first call. On the first call again we have two transactions, that is due transaction as well as the receiving of the first call amount transaction. Due transaction here what happens? Equity share first call account debit to equity share capital account, 10,000 into 2, it becomes 20,000 and 20,000. We are receiving the entire first call amount. So bank account debit to equity share first call account, it becomes 20,000 and 20,000. So again on the final call what happens? Again on final call we need to make the due transaction. Equity share final call account debit to equity share capital account, 10,000 into 3, it becomes how much here? 30,000 and 30,000. Whether we received the entire final call amount, that is the case here. So we are not receiving the entire final call amount. When we are not receiving the entire final call amount, bank account debit to equity share final call account, 10,000 shares minus on how many shares we are not receiving? 500 shares. So it becomes 9,500 into 3. So it becomes 28,500 shares. On 28,500 shares we are receiving the final call amount. Again moving to the next thing, on forfeiting. Why we are forfeiting? They didn't pay the amount on which thing? On the final call. So we are forfeiting that 500 shares. So automatically what happens here? Equity share capital account debit 500 into 10, it becomes 5000. To share forfeiture account 500 into 7, that is they have paid the amount of application allotment first call. They didn't pay the amount on which thing? Final call. So here what happens? 500 into 3, how much it becomes? 1500. Here the shares has been cancelled or forfeited. When the shares are forfeited, again we are making the reissue. So reissue, what happens here? Bank account debit. How many shares we are reissuing? Entire forfeited shares of 500. 500 into 7, it becomes 3500. Share forfeiture account. How much is the discount giving here? Face value is 10. 10 minus, that is 10 minus 7, that is 7. It is the 3 rupees is the discount given. So share forfeiture account debit 500 into 3, it becomes how much? 1500. To equity share capital account 500 into 10, it becomes 5000. Now we need to find out the difference amount that should be transferred to which thing? To the capital reserve. Here you can notice that clearly 3500 is credited, that is the share forfeiture account. 3500 minus the debit forfeiture of 1500, it becomes 2000. That 2000 will be transferred to which account here? Capital reserve account. So being the surplus amount of the forfeited shares transferred to which account here? Capital reserve account. The amount is 2000. Moving on to the next problem. That is the 22nd problem. You can notice that on 1/5/2015, the date has been given here. On 1/5/2015, the directors of X Limited issued for public subscription 50,000 equity shares of rupees 10 each at rupees 12 per share. So here they are saying clearly 50,000 shares they are X Limited is issuing for the public subscription. 50,000 equity shares they are issuing at the rate of 10. But what happens here? The issue price is how much is given? 12. Face value is 10. Issue price is 12. That means the problem is related with the issue of shares at premium. Share payable as to rupees 5 on application including premium. See here, this is the new adjustment, I think, on the first. Before problems, whatever we have discussed, majority problems is related with on allotment, they include the premium. But here what they included? On application itself, they have included the premium. So rupees 4 on allotment and the balance on call. So rupees 4, 5 here, again 4 rupees on the allotment. The remaining balance will be transferred to which account? On the call account. So here you can see that again the list were closed on, date is given, or list is closed on 1/2/2015, by which date application for 70,000 shares were received. My dear students, here clearly listen here, we are giving only 50,000 equity shares for the public subscription, but we are receiving the applications on 70,000 application amount. We are receiving for how much here? 70,000 shares we are receiving. So that means it is treated as an over subscription of these shares. 50,000 is the actual public subscription we are giving, but the public are demanding for 70,000 shares. We are receiving the application amount of the cash received. Which cash received? This 70,000 application amount cash received, 40,000 was returned. That means we are not allotting that 40,000 worth rupees value of shares, and 60,000 was applied to the amount due on allotment, and 60,000 worth what we have know that we are adjusting with the allotment amount. On 1/3/2015 the allotment was made, and by 1/4/2015 the allotment money was received. On which date we are receiving allotment money? On 1/4/2015 we are receiving the allotment money. On 1/5/2015 the call was made. By 15/5/2015 all the shareholders paid the call money with the exception of an allotee of 500 shares. All the shares we have received, the entire 50,000 shares, equity shares value we have received the final call amount, but we didn't receive on how many shares? 500 shares. That means 49,500 shares we received the call amount. These shares were forfeited. Which shares forfeited? The 500 shares were forfeited and reissued as fully paid at how much value they are giving? 8 per share on 15/8/2015. Pass the necessary journal entries for the issue, forfeited and reissue. Clearly listen, my dear students, here 50,000 shares the public, that is the company is issuing for the public subscription, but the public is receiving the shares of how much? That is 70,000 shares they are collecting. So that means it is an over subscription. So how many shares extra we are getting? 70,000 shares. So in that 40,000 we are returning the amount. So 60,000 amount was adjusted to the allotment. So here two journal entries will be extra in the application amount returning as well as the application amount adjusted with the allotment. Again in the application itself we have the share premium account. So here we can see the given information. Total application amount received. How much application amount we are receiving means 70,000 into 5. It becomes how much? 3,50,000 we are receiving. Entire amount we are receiving how much? 3,50,000. Excess application money returned. Excess application money returned how much it becomes? 40,000. They themselves directly given here. Excess application money adjusted to share allotment. On share allotment how much we are adjusting here? 60,000. So here you can see here on application 50,000 into 5. This is the original application amount we need to transfer to the share capital account. 50,000 into 5 becomes 2,50,000. On allotment 50,000 into 4 it becomes 2 lakhs. On call 50,000 into 3 it becomes 1,50,000. Coming to the forfeited, how many shares forfeited? 500 shares are forfeited. Forfeited 500 into 10 face value it becomes 5,000. Unpaid amount 500 into 3, call amount is 3, so didn't pay the amount 1,500. Reissue amount 500 into 8 we are reissuing, it becomes 4,000. Clearly listen here. So whenever 50,000 shares we are issuing for the public subscription, the public is demanding for the, that is we are receiving the amount on application is how much? That is 70,000 application amount we are receiving, that becomes 3,50,000. In the 3,50,000 we are returning the amount of 40,000 and again 60,000 we are adjusting with the allotment. Remaining will be 2,50,000. This 2,50,000 is the original application amount transferred to which thing? To the share capital. Now we can move on to the journal entries. So journal entries in the books of X Company Limited. So first transaction we are receiving the application amount. Listen here, on 1/2/2015 we are receiving the application amount. On how many applications we are receiving? On the 1,005, that is on how many applications we are receiving? On 70,000 shares we are receiving the application amount. So bank account debit to equity share application account. So 70,000 into 5 becomes how much? 3,50,000 and 3,50,000. In this 3,50,000, the excess amount of application, how much is the excess shares? We have 20,000 shares. Excess amount we need to adjust somewhere. So what we are making the first transaction here? We are returning the amount of 40,000. So 1/2/2015 equity share application account debit to bank account. How much we are returning to the shareholders? Again it is 40,000 and 40,000. The share applications money has been returned. Again what happens on 1/2/2015? The share application amount is adjusted to the share allotment amount. So equity share application account debit to equity share allotment account 60,000 and 60,000. These two transactions are new transaction. And again coming to the point here, we are making the premium in the application itself. That is also a new case here. That is premium amount is receiving on the application itself. Before problems it is on allotment. Now we are receiving on the application itself. Same as it is processed. Premium, share premium should be always credited. So on 1/2/2015 equity share application account debit 50,000 into 5 becomes how much? 2,50,000. It will be confusing here. Listen here, 3,50,000 is there. How much is the 3,50,000? Is the debit amount of bank account, that is receiving the entire application amount, minus 40,000. How much it become? Again 3,10,000 minus 60,000. So it becomes how much here? 2,50,000 is the exact amount we need to receive on what? On the application that should be transferred to the share capital also. Here in this 2,50,000 also it includes the premium amount. So to equity share premium account, how much is the premium? Here we have given 2 rupees, we are giving 50,000 into 2 means it becomes 1 lakh. To equity share capital account, that is original application amount transferred is 1,50,000. Now coming to the next transaction, the next transactions will be as it is, there is no changes. On 1/3/2015 allotment, here premium is completed in the application itself. So allotment, what happens here? Equity share allotment account debit to equity share capital account 50,000 into 4 rupees for the allotment. So it becomes 2 lakhs and 2 lakhs. See here, one more thing is there. When we are receiving the amount, we are adjusting amount is how much? That is 60,000 amount we have adjusted already. So what happens here? 1/3/2015 bank account debit 2 lakh minus 60,000, it becomes 1,40,000 and 1,40,000. Where we got 60,000? We got that amount adjusted in the share application account. That is share application amount. We have received extra amount now. That amount of rupees 60,000 has been adjusted to the allotment account. So bank account debit to equity share allotment account 2 lakhs minus 60,000, it becomes 1,40,000 and 1,40,000. Next, on first and final call, on call they are given on 1/5/2015 equity share first and final call account debit to equity share capital account being call money due. Here what happens? 50,000 into 3, it becomes how much? 1,50,000 and 1,50,000 due transaction. Next it will be for the received transaction, received. So on 15/5/2015 what happens here? Bank account debit to equity share first and final call account. We are not receiving on entire 50,000 shares. We are receiving only on 49,500 shares. That means 500 shares they didn't pay the amount. So 49,500 into 3, it becomes 1,48,500 as well as 1,48,500. Again coming to the forfeiture transaction, how much shares we are forfeiting here? So exactly 500 shares we are forfeiting on 1/8/2015 equity share capital account. 500 into face value of the share is 10. So here we should not include premium. 500 into 10, it becomes 5,000. To share forfeiture account, 500 into how much they have paid? They didn't paid only final call amount of 3, then they have paid 7 rupees. 500 into 7, it becomes 3,500. Equity share first and final call account 500 into 3, it becomes 1,500. Now what happens? That whatever the shares we have forfeited, no, that shares we are reissuing. When we are reissuing, what happens on 15/8/2015? Bank account debit, share forfeiture account debit to equity share capital account. 500 shares are reissued at 8 rupees, so it becomes 4,000. Again share forfeiture, how much is the discount given here? 10 rupees face value, 8 rupees reissue means 2 rupees. Share forfeiture account of rupees 2, it becomes 1,000. 500 into 2, it becomes 1,000. To equity share capital account 500 into 10, it becomes 5,000. Now what happens? The last transaction is of 15/8/2015 share forfeiture account debit to capital reserve account. How much is there? 2,500 and 2,500. How we got this 2,500? You can see here 3,500 of share forfeiture of debit amount. How much is there? 3,500. 3,500 share forfeiture amount we have minus this share forfeiture amount of debit 1,000. So it becomes how much now? 2,500. So this is the end of this issue of shares at premium. So this chapter has been ended, my dear students. Listen here. So we are seen various installment. The first installment is on application. Application, we have 2 journal entries. First is on which journal entries? First is received journal entry. Next is the transfer. Received means what happens? Bank account debit to share application account. Transfer means share application account debit to share capital account. Allotment means 2 transactions again. One is for the receive, one is for the due, next is for the receive. Due means what happens? Share allotment account debit to share capital account if premium is given, to security premium account or to share premium account. Again received means bank account debit to share allotment account. First and final call is given means what happens there? First is due transaction, then again is received transaction. Due transaction, what happens? Share first and final call account debit to share capital account. Next transaction receiving means bank account debit to share first and final call account. Forfeiture means what happens? Directly share capital account debit to share forfeiture account to share first and final call account. If you are not receiving amount on allotment, we can include there itself share capital account debit to share forfeiture account to share allotment account to share first and final call account. Again, while making the last transaction, the difference between the credit as well as under the debit share forfeiture account transfer to which excess amount transfer to the capital reserve account. So share forfeiture account debit to capital reserve account. So in this chapter only the journal entries we have seen till now, it has been completed. Now in the next class we can move for the last chapter. So until, bye from Mr. Kulandaraj, accountancy lecturer, SDC College, Bangarpet. Thank you my dear students.